Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. Candle by candle market psychology, and looking at what's generally going on in the markets as a whole, how it's moving and why it's doing what it's doing. And we start off the day with an inside gap to the upside, meaning that we closed yesterday here and it opened here, but this open is still inside of yesterday's high and the low, which is further down there. So it's an inside gap up. Typically with that type of gap up, you're going to see the market, well, quickly fill the gap. It usually doesn't take very long for it to fill the gap in those situations because it doesn't have far to go. And the gap would be filling the settlement price back down, in this case at 38.0575. So a lot of sellers are going to see this first bar of the day as a very viable reason for a potential short. And they're going to be looking at a lot of different factors. It's not just one type of seller. It's gap fills who are looking to the downside. It's second sells from an RTH perspective, although from an ETH perspective, that might be a different case. That's also a situation that's fading off of some major levels of resistance and looking for a gap fill. All the probability in the world would dictate that shorts are going to try to take this lower. And that is exactly what did not happen. It gets the sellers in underneath the lows and then immediately snaps right back to the upside. Now it's starting to look like a twin reversal, well, actually above this swing where it tried failing in and now it's going back to the upside. The likelihood of the gap filling at some point today is still very high. The gap almost always fills, especially when it's this small, during the same day, very frequently. And if it doesn't, it's usually within the same week. And if it doesn't by then, it might be a while till you see that gap getting filled again. But usually when it's this close, it's going to be pretty quick. And a lot of shorts likely got stuck on that. That means that a lot of traders are going to be looking to exit with stops above the bull bar. Now, here's a few caveats to that and why that is potentially a really bad idea. This is a possible swing high. We already understand that. But this swing high is rejecting the previous high closes, high opens. That's really strong rejection. And although it does look like it's tried to roll over and the bulls are starting to take over again, it's not very likely that it's going to trigger above this and go screaming to the upside. It's got a ton of resistance above us that it's going to have to work through. More realistically, any sellers who are short below this will see this as an opportunity to sell above this bull bar and then average out when it comes back if they're stuck short. And if they're not stuck short, then, cool. They might find an opportunity to buy on a pullback on the next candle. But realistically, this isn't a situation that would really freak people out because there's just so much that the buyers have to work through. It's not likely going to get going anyway. And the gap is still unfilled. And they close out this beautiful doji bar. Fantastic. And I mean, it follows through with exactly what you would have expected. Sellers get stuck underneath the lows. They sell above that candle's high, and right in the middle, right there, is about where you're going to see a lot of traders exiting. And if we put a volume profile on here, let's see if that actually kind of follows through. Yep, sure enough, there's all of the volume right there. So all of the sellers who got stuck there sold more above, and they found their average out inside there. Pretty plain and simple. So now all of the sellers who were potentially stuck at the beginning of the day are out of the way. That doesn't necessarily pave the way for the bulls to take back over. But realistically, they've got a better shot going higher now than they did before. Sellers have had a chance to get out. There are still definitely some stuck sellers with their entries at around 38.0675 who maybe can't afford the luxury of building into positions. They're still stuck. So knowing that traders are potentially stuck is useful information, but realistically, these first three candles, man, they haven't done a thing. It's just barely done anything in the first three bars. The first 15 minutes of the day had an open here and a close here. This is just basically a giant doji that starts the day off. That doesn't prove a thing. So it's very, very range bound here. And we go into the next candle, geez, with another inside bar. That is, it's proving nothing again. I mean, the only thing that's happening here is price is constricting. We're not seeing the market go up. We're not seeing it go down. The bodies of the candles are getting smaller and smaller, if there is a body. And it's just running into a little bit of a brick wall. Earlier sellers who are stuck potentially are just taking the exits. Buyers who potentially came in above the highs because they will have been there, buying at the top and, realizing that might not have been a good idea. They're in the gray area right now. They're a little bit nervous. They got triggered into the long, immediately pushed back on, but never stopped them out. As long as this gap remains open, buyers have sentiment at least to believe that we're going to get a pop through the highs, maybe up towards like the 38.15s, get a point or two above the previous high, just to really solidify it and, maybe then back off and fill the gap. Either way, this inside bar doesn't prove a whole lot, and it will likely find a lot of buyers below the bar trying to buy low, and a lot of sellers above the bar trying to sell high, just looking to fade both ends and kind of playing off of the scalping sense. And the next candle is a beauty. Lovely. Another doji. Perfect. So the first 25 minutes have done effectively nothing. It's a little bearish now, I guess, but it's mostly just wicks and stuff. Overall, volume is very balanced. Sellers potentially got stuck. Buyers got potentially stuck. Everybody's stuck, and it's hanging in between both of them, right? The buyers are in the negative, the sellers are in the negative, and nobody's happy right now. It's just hovering, and there's no decisions being made. So it's a balance. We're seeing more continuation. It's a double inside bar, identical candles. And usually when you have a double inside bar, it leads more so to a breakout. It's kind of the mentality of a constriction before an expansion. Same thing here. We have a constriction. It's likely that we'll see some traders trying to get a breakout. We'll also see traders trying to fade the top of it. Both of them will probably have some success, honestly, depending on how it wants to go. We get a nice bull bar to the upside, and like we were talking about, sellers will sell above that candle's high. They'll be selling above the swing high. We're starting off as a range, and we've got resistance from yesterday. There's no reason to believe this move to the upside has any merit whatsoever. So sellers are going to be selling like crazy, and buyers who did end up buying down here, buying on the pullbacks, however they played it, now we're pressing into their profit targets. There's going to be some profit taking here, and it's likely that within the next couple candles, we'll see a near top. Still looking for a push through the highs, although they did get it by one tick. I would like to see maybe a little bit more than that, again, up to like the 14s or 15s, get a point or two above the highs and show some sentiment. And they finally did it. We have a pop above the highs and a close above the highs and a break above that previous swing high and a close above that previous swing high. Everything showing that buyers are trying to take off. Put this into context though. What is happening, right? This is an area that's going to get a lot of people stuck on the wrong side at the wrong place. Zoom out a little bit. Where are we? We're at the top of a major range. This is a really bad spot to try to be a buyer. There's a lot of crap in the way. You've got some rising resistance in the way that gives a little bit of wiggle room. You've got an open gap that's still a little bit further up there. So there are definitely some magnets that might be trying to draw price up. But more realistic, you've got resistance all over the place. It's going to have to work through that before it actually makes any ground further to the upside. And this seems like a potential range breakout that's just going to get failed right back in on. The one thing that we are seeing here is that we're making new highs and there's no volume. So there's not necessarily a suggestion of buyers getting out or taking profit or new sellers coming in. So there's no real sign of that happening as of yet until, maybe we can get a few more bars, maybe a couple more presses to the high, maybe we fill some of those objectives. Oh, okay. Well, and then there's that. So big pullback to the downside. Man, I wish I didn't pause the recording before I went to the next candle. I was going to talk about this zone at the bottom. Well, this zone at the bottom is a very nice flat bottom zone of interest. I didn't think it was going to get all the way down there in one candle, but it's right back to that median where all of that volume was. And it's a flat bottom, bricked bottom candle in the middle of a range. Everything is asking for it to come back, and it bounced right off of it and pinged back higher. Now we have a gigantic bear engulfing candle. That is kind of what you would expect to see. We've got bulls that are rallying to the upside. We hit the highs. We see the profit taking. We didn't see any volume on the initial rally higher, but now we're seeing some volume coming in, which should be pretty obvious. And a lot of that volume came in where? Right there at the top. So the fact that all of the volume stepped up at the top in one big chunk, right? One big blast of volume pretty much sealed the deal that buyers were looking to take profit and they got their targets. For whatever reason, that was their target. I was looking at, it's actually right around 15. It's perfect. A couple points above the high. See, everyone else is thinking the same thing. And we start pulling back. Now, this is still a range. We got to keep that in mind. It's likely going to fill the gap, so I do want to be a buyer on the cheap. But what do we have? We have a giant candle. It's the biggest candle this day is seen, one of the biggest bodies this day is seen, and it's an engulfing bear bar that overtook two previous bull bars. On a normal day, that would scream, sell everything, and if you're long, get out of the way. But this time around, we're in a range. That screams washout. There's going to be buyers who are buying into this move, expecting it to bounce back up again. We're still expecting all of those objectives higher to fill, and we've only had the first attempt. This might be a breakout pullback. And a beautiful washout to get that going allows buyers to come in with a stop below the washout. That's also below that brick bottom structure. That adds a lot of support. And their targets are back to the highs. It's a very nice 2-to-1 scenario. It gives them a lot of reason to believe that they should be able to get at least another pop-up. And it's favorable as far as risk-reward goes. That's not exactly the bounce I was talking about or looking for, but that's the bounce, I guess. Inside bull bar, and a lot of back and forth going on. Sellers trying to defend the highs, buyers buying the lows. It's just kind of bouncing back and forth. But notice, it never did come back to that break even on buyers who would have bought the lows of that candle. That's a clue. We're starting to see, even though this is a really weak inside bar, there may be some underlying strength at play. Especially noting what took place here before. All of that volume, and now this giant bear bar and it falls on its face? Yeah, I mean, that's a weak bull bar, but realistically, where are the sellers? Where's their follow through? So looking for a continuation from the bulls? Maybe. Volume is lifting a little bit on an inside bar, which has almost equal volume of that previous drive down. That's another pretty big clue that something was absorbed in here. And if we look at the volume profile overall, we already know there was a lot of volume that happened at the top, but we're also seeing a lot of volume coming in where? Right below that previous bull bar. Buyers are trying to buy into the move, and that's what's closing under it. If they can get back above, we're probably going to attempt the highs one more time. It's those low risk, high reward scenarios that's setting up pretty nicely. We get another big pop to the highs. Nice bull bar, and kind of interesting. We're seeing new highs pressed into, but where's the volume? There's no increase in volume going into these highs. That kind of begs the question of, wait a minute, well, what's happening, right? I thought the buyers were trying to take some profit up here. The big lump of volume's at the top. That's not a big surprise. Any buyers who may have gotten stuck in there, they were able to get out. But, well, that's a really strong close. It's at the top of maybe a little micro channel, just sort of grinding its way higher across these areas. It's obviously near the high, But we're not seeing an increase in volume overall, which would suggest that buyers aren't necessarily taking profit yet. We move into the next candle with an inside pullback once again. And I mean, again, this isn't a surprise. This is a range and it's grinding higher, but it's a surprise in the sense that we're not really seeing the volume show up yet. We're not seeing the proof that the volume's here. We're just seeing more residual volume hovering around the 38.14s. Now, a lot of buyers may have been waiting to see where the high gets put in. So if it goes back up, a lot of times these previous swing highs, like over here, or the high closes or opens, the previous highs, all of that becomes a zone of resistance. They don't know where the high is, so they wait for it to get put in and then sell when it comes back again. So kind of a double top situation. We're still in a range, so double tops are relatively likely, and we haven't seen an increase in volume that would suggest that the buyers are out of the way yet. So we got to see a bit more info. And we get a little itty bitty bull bar, but a lot of volume coming in on that bull bar. And that's interesting because there's a lot of wick on the top. So if we look at the wick at what's going on there, a lot of sellers may have come in around the low of that candle. That might cause some problems. All of the volume being right underneath that inside bar, bulls trying to take it lower. We saw the same thing earlier. Well, this time around, they're not showing that they're really ready to get going yet. They've got a bit of trouble. They're trying, but, well, they're running into some issues. There's a lot of volume up here, and it seems like there's a lot of selling action going on right around those previous highs, previous high closes, weak bull bars. That's not helping anything by any means. Oh, yikes. And then we get this giant bear engulfing candle back down again. But notice what it did. Where did it go? It went up to the high closes, high open, all up there. And that allowed traders a chance to get out. And once they were able to get out, the market dumped all the way back down again until it got just obliterated through the base, where the rest of the volume steps. Yeah, look at that. All the volume right back underneath the candle again. So all this pop was just buyers getting out. Now, we're still in a range, but this is a little bit of a different story now because look at what's happened. We've got the sellers who got trapped underneath the first candle of the day. We had the buyers who thought they might have been trapped for the first few candles of the day, but they were rewarded with a breakout to the upside and a couple legs. So, it worked out pretty well for them. As far as the range sentiment goes, though, we still haven't filled the gap. We had a two-legged move to a new high. We're fading off of highs, and we just saw a ton of buyers jump ship on a big bear engulfing candle. It makes a lot of sense to see this potentially follow through a bit more. Maybe not necessarily all the way down to fill the gap, but it wouldn't be a surprise in the least to see sellers trying to push this back again, looking underneath the previous bull bar as resistance, maybe even a little bit lower to challenge these low closes, or better yet, down to this brick bottom candle again. That's going to be the big zone of interest. All of that volume is still inside there, and the shorts obviously know they're wrong now. So what are they looking to do? They want to get out when it comes back. You've got all of those break-even traders that are just waiting, like, please come back. I've been waiting all morning. Just come back and take it out. And then they finally got their flush to the downside. They grabbed the stops, and if we look at the volume on this move down, going into, what was that candle, 1040? We can see there was a massive amount of volume underneath that low. It's all those sellers who were in there earlier jumping ship. They're averaging out. They're getting out of the way, getting out. They're not looking to make money. We talk about this all the time with these kind of moves. Their intention of making money was broken as soon as the market went above the highs. They're no longer trying to make money. They just want to get out of the trade. Like, just get me the heck out of this thing. I don't want it anymore. It didn't do what I wanted it to do. It doesn't mean that it can't keep going further down. There is still that open gap objective, but a lot of sellers are going to jump ship from earlier, and when sellers are jumping, that means they turn into buyers. So going on to the next candle, we've got a nice pop to the upside, and obviously that last flush down had a huge amount of volume, but a big push up and more volume stepping up. Now, given the context of what we just talked about, there's a big likelihood that this move up has still a lot of buyers who are stuck at the top and they're looking to get out, right? Well, we're right back to those high opens, high closes, all of this resistance again, and we're seeing it falter. It's not a good sign, not a bad sign. That is a good bull bar, so there is a chance that they get a nice continuation up, maybe to break the highs. But this isn't necessarily what we want to see in this context to be a bull. I want to buy low in a range, and the lowest point that looks halfway decent would be down here, not right in the middle of the range. It would make more sense that sellers are going to be coming in here to try to push the market back down for scalping. And we're also starting to go into that 11 o'clock time frame where things slow down anyway. Now, I've got an inside bar after that. That doesn't help anybody. Low volume on that. So at least the volume is back to what it should be doing. Inside bar, low volume, that shows indecision. Okay, cool. We're back to normal a little bit. We go into the next one. We've got a really disgusting looking doji. It went above the highs. Possibility of a trap. Absolutely zero volume. Like, there's no volume that took place there. That was the lowest volume of the day. So realistically, this move higher, although it might have been a trap, I don't think many people took the bait. Otherwise, there'd be a lot of volume there that would dictate a possible trap. It might still show up in the profile, which it does. So there is a lot of volume here, but that's really about it. We see buyers that picked up the lows and now they're selling above the highs. They're not looking to buy for continuation. If they were buyers looking for continuation, it should have gone already. So this is where you have to start looking at it and asking, well, something's wrong. And there's the something that's wrong. It went back down to that support level at around 11 and bounced back up. It refilled a few more buyers down here. Now they've got a chance to try to take it higher if they want. But again, look at the context of what's happening. We're in a range. We just came off of the potential highs of the range, and we have an unfilled gap where? Right underneath the lows of the range. Man, does that ever scream potential target, and now it's going into 11 o'clock. So if we finish off the rest of the day and kind of see what happens... Okay, to the tick. They did eventually get down there and get it. Okay, well, they ended up breaking through it too. But that's how we can utilize this information to our advantage to see, well, where are people trapped and what are they likely to do? How can we use that information to our advantage to formulate our plans? So hopefully you found it useful, interesting, entertaining as per the usual. Like always, if you have any questions, feel free to send me an email, jhb@ssftg.com. Until the next one, like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next time, we'll see y'all then. Thanks.